There was a survey that just came out where Americans were asked what they thought the best long-term investment was. And the results honestly shocked me. 37% said real estate, 23% said gold, 16% said stocks, 13% said CDs and savings account, and only 4% said Bitcoin or crypto, which is down from 2022. Most Americans probably aren't aware of Paulo from Tether.
The aim is to get to 42,000 Bitcoin, then go beyond that, ideally to infinity.
He just casually said that 21 Capital is going to buy $4.2 trillion worth of Bitcoin, and then infinity after that. They probably don't follow Cathie Wood either.
Bitcoin has always been a leading indicator of where risk assets will go. So this is generally a positive skewed market for Bitcoin. I think specifically to Bitcoin, what's happening is where's the buying coming from? And so again, you have these publicly listed entities that are consistent buyers of Bitcoin.
Maybe they've heard of Conor McGregor, who's advocating that Ireland gets a strategic Bitcoin reserve so that the people can have their money represented. I'm shocked because honestly, there's so many long-term investment tailwinds coming behind Bitcoin hiding in plain sight. All signs are pointing towards Bitcoin becoming the global store of value globally. Today, we're going to evaluate Bitcoin versus some of these traditional assets. You decide what you think the best long-term investment is. I think you know what my answer is. This is Dante Cook with Bitcoin Simply. Let's go. It's kind of shocking that 37% of Americans still think that real estate is the best long-term investment. Here's the first problem with this thesis, fundamentally. How can you invest in something that you cannot afford? I went on the St. Louis Fed website and the median price of a home in 1963 was $17,800. And today, it's just about $417,000 per home. So with a down payment of $83,000 and interest rates between 6 and 8%, well, that puts an average monthly mortgage at around $2,200 to $2,500 per month. Who can afford that? Not to mention, it's an asset that no one can sell and no one's applying to buy. There's literally no demand out there right now. Existing home sales are as low as they were in the Great Financial Crisis. Mortgage applications are as low as they've been in 30 years. And the number of homes that are permitted but haven't started construction are at 16.5 months, the highest record of all time. Let's contrast this with Bitcoin, where even real estate guys like Grant Cardone say that they're going to be buying up to 1,000 Bitcoin from their real estate funds. And BlackRock's pointing out the obvious thing. If every millionaire wanted to buy one Bitcoin, well, they couldn't. There's not enough supply. Firms like Neoclassic are pointing out the obvious fact that there's multiple layers of demand that are coming into this asset class, which is going to send it much higher.
What's happening is where's the buying coming from? And so again, you have these publicly listed entities that are consistent buyers of Bitcoin. You have one of the most profitable companies in the world, Tether, that continues to use profits to buy Bitcoin. Tether is what the insurance business was for asset management. It's becoming one of the largest balance sheets out there. You have states, so New Hampshire, Arizona, potentially Oregon, who are now adopting digital asset holding frameworks that are going into law. You have sovereign states. I was in Dubai last week. The UAE, alongside many other nations, are buying Bitcoin as a reserve asset. So you have demand coming from there, and then where do you see supply consolidating?
Very similar to gold, I was going to say.
You've also got famous VC investors like Tim Draper, who has literally the craziest eyebrows that I've ever seen, saying that the dollar is going to collapse. And not only is Bitcoin a store of value, but it will become a medium of exchange.
Price of Bitcoin. I did say 250,000 by the end of this year, but you go out 10 years, and the answer is infinity against the dollar, because there won't be a dollar. There won't be a need to have a dollar. Once I can buy my food, my clothing, my shelter, pay my taxes all in Bitcoin, and it's a better way to collect taxes for sure, then there won't be any reason to hold on to any Bitcoin. I mean, to hold on to any dollars. And Bitcoin will be the primary source of owning wealth.
And it's not just Tim Draper saying that the dollar is going to collapse. The US government is already pointing out chinks in the armor. They said that on the dollar side, the reserve function of the dollar has created trade imbalances, trade deficits, and caused the hollowing out of the manufacturing class in America. Are you factoring the dollar collapsing into your long-term thesis? Before we go any further, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018. They've issued over $9 billion worth of loans to tens of thousands of customers, and they do so in a fast, seamless, transparent, and open way, which is why they have over 1,000 five-star reviews. You can get liquidity in your account in less than 24 hours. In fact, it's 18 hours on average. If you want $5,000 loan, you post $10,000 worth of Bitcoin collateral. Loans start at just 12.4%, but for people that go to learn.ledn.io/simply, well, you can get 0.25% off of your first loan. Don't sell your Bitcoin. The next sponsor is the Bitcoin Way, who will help you to protect your generational asset the right way. They'll help you remove your keys from third-party exchanges confidently, safely, and securely, so you won't ever have to rest worrying about whether you're going to lose your Bitcoin or whether your loved ones won't get it. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. They'll walk you through step-by-step of how to protect this generational asset. When you're thinking about long-term investments, are you thinking about them becoming the global backbone of digital infrastructure moving forward? The former PayPal president and the guy who actually created Libra, the first stablecoin in the world, knows a thing or five about payments. And he says that Bitcoin is going to become the global infrastructure for payments.
Big banks, legacy payment systems, SWIFT, watch out.
I mean, I think, look, you need to build the best tool, right? No one is sending faxes after the internet. So, the current version of the money networks are like the fax or even telex of, our age. And if you have a better thing that's actually really truly moving money to the place you want and taking it from the place you want globally, then yeah, it's like old networks are not going to be around.
If you get this right, what does Lightspark look like by 2030?
Well, I think, Lightspark is not the network. Lightspark is providing tools and services to network participants to be able to get on the money grid. And so we take a small cut of transactions. We think the addressable market for us is trillions of dollars a day. And so if we can take a small cut of trillions of dollars a day and then build all of the adjacent services that stem from having users at the scale of billions of people on the network, we'll do just fine.
Bitcoin isn't just a store of value like a house that has no other utility value. It's a technological revolution. It's an insurance policy. It's a fixed supply asset with unlimited demand being unleashed into a new era of buyers as we move into a digital future. I take my cues from Bill Miller, who's one of the best investors of all time, having beat the S&P 500 for 15 years in a row. He has over 80% of his portfolio in just two assets, Bitcoin and Amazon. He's one of the best investors of all time, and I regularly go back to this clip and listen to it because he's laying out the thesis of not only is Bitcoin an insurance policy, it's a technological revolution with unlimited demand. And these technological revolutions, when they become the dominant source of technology in their field or their era, which is digital assets, well, they become almost impossible to replace. Listen to this 4-minute clip. You'll learn something.
So, why such confidence in it as an investment, aside from the fact that it certainly has worked really well and more people are kind of jumping on the bandwagon?
There's several different ways to approach that.
Yeah.
I would say that right now, it's best thought of as digital gold. So gold is, as people have said, a store of value for 5,000 years.
Right.
And gold is what people typically fled to when the governments tried to, inflate them out. And in the United States, Franklin D. Roosevelt confiscated everybody's gold in 1933. You had to turn it in or you went to jail. So they can't confiscate your Bitcoin because there's nothing, you hold it securely. As long as you have an internet connection, you can send it somewhere instantaneously at very low cost. And the reason I like the insurance company analogy is because if you think about, people talk about the intrinsic value of Bitcoin. This is a Warren Buffett argument, that Bitcoin has no intrinsic value. It doesn't have any earnings. It'll never pay any dividends. And so how do you even think about something like that? It is a new technology. It's something that couldn't be done before. But in any case, the answer that I have to that is, well, I mean, what's the intrinsic value of that Mickey Mantle baseball card that sold for $5.5 million? It's just cardboard, and it doesn't even have a legend. It could be counterfeited very easily. Or what's the intrinsic value of a Picasso painting, which is just canvas and paint and maybe a frame? But people will pay millions or tens of millions of dollars for it. And so it comes down at the very basic level for supply and demand. So Bitcoin is the only economic entity where the supply is unaffected by the demand. So even with gold, if gold, which is $1,800 today, if gold goes to $18,000, there will be a lot more gold mined because mines that are unprofitable will become profitable. And so gold, which accretes today, the production of gold is equal to about 1.5% to 2% of the total value per year. That's the same accretion that Bitcoin has currently. But this year, 2022, I think will drop below 1.5% on that. So only 21 million Bitcoin can ever be created or close to it. It doesn't matter if Bitcoin is 100,000 or 20 million, there's only going to be that many of them. So all you have to really believe is that the demand for Bitcoin will grow faster than 1.5%, over the next number of years, and the price inexorably will go up. So I've only recently been allowing myself to be described as a Bitcoin bull. I used to tell people, they say, oh, you're a Bitcoin bull, you own a lot of Bitcoin. I'm like, I do own a lot of it, but I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity, and it's following that very, not predictable, because it's not predictable certainly in the early days, a well understood path for the adoption of new technologies. And I think it was Stan Druckenmiller said earlier in the year that, and now he owns Bitcoin, by the way, but he said that Bitcoin was a solution in search of a problem. And what I've found amusing about that is every new technology is a solution in search of a problem. Because you have a new technology, then you try and figure out what you're going to do with it. And so, when we created the internet, what are we going to do with that? So the Defense Department had good uses for it, but it was tough for other people to see. But now everybody can see what the value of the internet is. Same thing with the internal combustion engine, which was very dangerous and all, but now that's taken over the world, and now we're going to move to electricity. So all kinds of technologies have to grow into their potential. And Bitcoin is, I guess if you want the theoretical answer to the question, is that's the work of Brian Arthur, Santa Fe Institute, and Stanford, who is kind of the leading authority on what he calls increasing returns economics and what he calls lock-in and path dependence in the economy. So his basic idea is that when technologies reach a certain dominance and they're the leader, it's almost impossible to dislodge them, even without a very superior technology.
So here's some of my final thoughts. Looking at what has happened in the past is a good barometer of how you can make okay to average returns. But in order to make outsized returns or alpha, you have to be non-consensus and right. You have to skate to where the puck is going, as Wayne Gretzky used to say. And the puck is clearly skating towards Bitcoin. From a corporate level, from an institutional level, from a nation state level, from a technological level, it will become the backbone of a global store of value network and the global infrastructure for payments. It's hiding in plain sight. Don't overcomplicate the trade. Stay humble and stack sats. The Simply Bitcoin team is looking forward to joining you and 20 to 30,000 other people down in Las Vegas at the Venetian from May 27th through May 29th at the Bitcoin conference, the largest Bitcoin conference in the world. This is one of the best ways to continue on your Bitcoin journey to level up while your sats go up and your purchasing power go up, while your education and your network of other Bitcoiners you know in the real world should also go up. Use the promo code SIMPLY for 10% off your ticket. That's simply at b.tc/conference/2025 for 10% off your ticket. If you get value from these videos, like always, please like and share them with your family and friends. And if you haven't done so, subscribe to the channel. This is Dante Cook with Bitcoin Simply. Happy stacking.